election and how to use the template to maintain your mark-to-market election. Now, if you've downloaded the template and it's on your desktop, just click there, invoke Excel. It will open up and you can read through the end user license agreement, and if you agree, click here, click OK on the thank you screen, and then you come to the roadmap for the mark-to-market election. It starts out with a drop-down menu as to whether you are required to file a tax return or not, yes or no. And if you're not, then all you have to do is place the election in your tax records by 3/15 of 2000 whatever. And what that is based on is this date right here. Most people do have to file a tax return, and so let's go ahead and assume that that is your situation. We'll put a current date in. I just used 3/2/2014, but if we move up to 4/14/14, what you'll notice is that down here this turns red, warning that if you are making this mark-to-market election for a non-individual, indicated by that asterisk, non-individuals are corporations, S corporations, partnerships, or limited liability companies, you are late in making that election. But let's assume that you are an individual and you're making the mark-to-market election for the year 2014. You're fine in this case. If it is 4/16, you are too late. This will turn red, indicating that your first mark-to-market year cannot be 2014, and it'll also tell you that you're too late. You might want to consider a new entity. If you do consider a new entity, which is indicated down here, you have until the 15th day of the third month after the new entity is formed to make the mark-to-market election. So that would be relief if you miss it. Now you do have to set up a new entity, which will probably cost you anywhere from $300 to $500 in legal fees and state filing fees. Might be worth it. Let's go ahead and say that's 4/14. We're okay. Now, here is the roadmap giving you the dates that you need to make your particular election. You need to calculate your 481A adjustment. You need to prepare a Form 3115 if you have been trading as a non-mark-to-market trader. Then you just trade. You trade during 2014 and you trade enough to satisfy that criteria. And while we're on that subject, this is the trader in securities criteria. So you're either an investor, a trader, or a mark-to-market trader. So to be a trader, you have to follow these criteria. Seek to profit from daily market movements. Your trading has to be substantial, measured either by the number of trades or the dollar volume of trades. Now I'll be quite frank with you, the IRS looks at number of trades. Because you can trade once a week and trade Apple, for instance, and that's a high dollar volume of trading. But it might not be that many trades, perhaps only 100 or so. So they're going to look at the number of trades primarily. Then your trading activity must be frequent, continuous, and regular. Okay, so let's go on back down here, and then you are going to mark to market your year-end positions as of the end of 12/31/2014. And these blue instructions show you the tab that you'll use to perform this particular function. And then you're going to file your appropriate return and tax schedules by either of these two dates. Now keep in mind This election, once made, can only be revoked with IRS consent. In other words, you have to write to the IRS and tell them, I want to revoke my mark-to-market election, and it's up to their discretion as to whether they want to grant that revocation. If you have any additional questions about this roadmap, you can go to my website, which is the Options Tax Guy Mark to Market, and I will show that to you at the end of this tutorial. But once you have decided the year, you can follow these dates provided as a checklist for making your election. Now, if you want this printed out, go ahead and click Print Preview. It will ask you, do you want to put the name of your trading entity on the top of the page? Yes, no, or cancel. If you cancel, you're going to go to another tab and input the name of your trading entity. Let's just go ahead and say yes. And what we have here is John and Susan's Trading Business LLC. Now this is the roadmap. Essentially, it's a summary of what was on the roadmap tab. So you can print this off, you can close it, and again, it's the summary of all of this. Now, let's say it's 4/16. You can't make the election for this year, so you're going to make it for 2015, and all of your dates will change. So that's the interactive feature of this template. So now, let's go to the election. Now here is John and Susan Smith, and they want to make an election. They're currently not trading as an entity. If they are trading as an entity, go ahead and make this format in that EIN, and that's the format that you would use. But they're trading as individuals, and it's going to be John and Susan's Trading Business LLC, and I'll tab down, and here's the format, their EIN of their trading business. Now if they're already in a trading as an entity, they would have 44-4444444. We'll make it the same as above, and that's their entity, and it just changes so that they are making the election for an already existing entity. Let's go ahead and change that back. Let's say we're going to make it for 2015. Now you notice that when I had 2014 there, it was the incorrect year. Well, it was the incorrect year because on a roadmap we've said we're too late, we're going to make it in 2015. So there's 2014, here's our election, and we're okay. Now this is example information, so you're going to type in your trading entity LLC, and that's what's going to be reflected down here. So you're going to take a look at what your election looks like, and if you like it, then go ahead and X out of that. Now if you forget what the examples are, for instance, you don't remember, oh, what did I put there, or how does this work, you can reload the example data and it'll all come back exactly the way it was when you first downloaded the template. Now if you need help is just a click away. For individuals, you're going to attach this election either to your 1040 or Form 4868. For non-individuals, those corporations, those partnerships, etc., LLCs, you're going to attach that to either the entity's tax return or its extension, which is typically a Form 7004. Now these forms can be obtained from this website at the IRS. Click OK. Now let's go over to the 481A adjustment. Now here's where you input your year. What this will give you is an error message, which is not really an error message. It's just if you don't use the roadmap, you can ignore this. But let's go ahead and agree to our roadmap, and we'll start inputting our stock. Now, start off with Apple Corp. I trade Apple a lot. Doesn't have to be in all caps. Is it an option? That would be either yes or nothing. Let's say I have 100 shares of Apple and it cost $550 and my commissions were $15. And the current market value, let's say, is $565. I'm going to go ahead and fill this out and we'll come back in just a second. Okay, I've completed inputting the holdings as of the first part of the year. And what this does is this: I have 100 shares of Apple. I originally purchased it at $550 per share, and I just made up these commissions. But its current value is $565, so it has actually gone up. So this is what my beginning adjustment is going to be on 1/1/2014. Remember, we're making our 481A adjustment as of 1/1/2014, and this is what's going to be used to complete our Form 3115, which is a change in accounting method. And we're going to send that to the IRS, attach one to our tax return, and send one to the national office, and all of those instructions are on the Form 3115. Now here it tells us that we're going to go ahead and make our adjustment in our current year because we have a negative adjustment. Now let's say that, for instance, I had originally purchased Apple. Let's say I bought Apple years ago, 100. In my mark-to-market adjustment, and I've got a huge built-in gain, I can make that adjustment over a 4-year period. So I would take $40,317.50 and I'd divide it by 4, and I'd bring that into income over a 4-year period. And that would be reflected on my Form 4797 every year. Now, what if I had purchased Apple at the top? And let's say I did some Google at, I don't know, 590, and now it's at 450. See, I've got a negative $49,000, almost $50,000 41A adjustment. According to the rules for the Form 3115, I can adjust this entire amount, this $50,000, in the current year, and that's also going to show up on my Form 4797. But that is basically how you complete this part of the template, and it is used in conjunction with page 4 of Form 3115. Now let's go on to our year end. Now, year end, you would think, well, why can't I just copy these over? Because this is my 1/1. Let me make, while I'm on this again, you're going to need to make sure that you click this as an option, because if you don't, for instance, see, that shows up as 2. So it multiplies that times 100. It assumes a multiplier of 100. That's 99.9%. I think I might put a multiplier function in here, but for the time being, anything that you're short, as the note says up here, anything that you're short is going to be negative. Anything that you're long will be positive. But back to my point about year end, you would think that I would have some sort of a function that would allow me to copy these over. But keep in mind, according to our trader and security criteria, my assumption is you're not going to have these. You will not have these shares. These shares will have been sold or bought to close or covered or whatever. I'm going to assume that you do not have those shares. So I'm going to input the same type of information here as I have over here, but not the same shares if I don't have them, because there's no adjustment for these shares on the year end tab. So let me go ahead and do that and we'll come back. Okay, we're back and we have all of our end of year positions input. Now this apple is not the same apple that was in our 41A adjustment. I sold those shares, but if they were the same ones, there's my 481A adjustment of negative 13,515. That's where I'd input this here. Negative 13,515, and that would adjust my mark to market because my price is actually higher than it was at the end or at the beginning of the year, which is 565. I took a big loss for the beginning of the year, and now I'm going to recapture that loss here. Since this is my first year, I don't have any prior mark-to-market adjustments for these shares. But keep in mind, here's a note, do not use this in subsequent years if those shares are gone. Now, this is the current market value per share. And so what you'll see, I'm going to go ahead and delete that so that we can just focus on this tab. My market price has gone down from what I originally purchased, so I've got a negative adjustment there. And same or with Boeing, it's actually gone up. But for Priceline, let's just say, for you options traders, where is the stock price for Priceline gone since I sold that a naked put or a cash secured put? Well, the price of Priceline has increased because my price has actually gone down. So that's a good guy. I have to take that into income now. And that's the thing about a mark-to-market election, is that a lot of people in prior years when the stock market decreased, I read and heard a lot of accounting pundits say that a tax professional is almost committing malpractice if they do not counsel you to make the mark-to-market election. However, let's go ahead and put our 41A adjustment, negative 13,515, negative 13,515. Okay, that's income. You have not realized these gains yet, but you're going to have to pay tax on that amount on March 15th or April 15th. So in an up market, this can be a bad thing. In a down market, it can be a benefit to you. So whatever these accounting pundits said about that's malpractice for not making the mark-to-market election, they just are not seeing the big picture. Go ahead and delete this. But anyway, you can walk through here, and this is just the adjustment that has to be made for the year 2014. Now it's also, because it's your first year, you'll have, well, we had a huge, let's say this was 575 and this was actually about 550, I think is what we said. So you're going to have a negative beginning of year adjustment, and you're also going to have a negative end of year adjustment. So this is going to be a tax benefit for you. Now, if we take a look at this prior year mark-to-market adjustments, how are we going to know that? Well, that's the great thing about this template, is you can archive your prior years so that you can reference back to them. So this is 2014 and we're now going to be moving into 2015, so we want to archive 2014. We're going to click on the archive. Have you changed the tax year drop down to the appropriate year? Well, yes, we have, 2014, so yes. And what it does, copies it out there, and there's your mark-to-market information for 2014. Then we come back to our year end. Let's go ahead and clear this. We'll get ready for 2015. And there we go. We don't have to do that for the 481A because that's a one-time adjustment. So that is the basics, really the detail of making the mark-to-market election and completing this template. I think this template will be a valuable asset to anyone who elects to make the mark-to-market election for years to come. Let me just show you this. Let's say that we wanted to, real quick, oops, I made a mistake. Well, it's going to tell you I cannot have a duplicate archive tab name. Let's say I put 2015 in, archive it, and yes, there's my mark to market. Now there's nothing there because we didn't input anything. Before I go, I wanted to go back to the roadmap and show you that this link will take you to my website for any additional information. I mentioned that and I wanted to show you where you would end up. Here's the mark-to-market page on the Options Tax Guy website. You can take a look at examples and mechanics and then some tax aspects of making the mark-to-market election. Here is the decision-making process, prerequisites, making the election. Here's also a PDF of the election itself. Instructions and aspects of completing Form 3115, relief for a late election, revoking and implementing, and then we take a look at this example. This is just somewhat of a dated example, but as you can see, we did have a run-up in 2017 as it turned out. The market history tends to repeat itself, and now we're on the decline, which shows that the mark-to-market election may not be appropriate in every situation. You can read through this. Here are the mechanics for making the election, and here's our roadmap again. Here you have the election itself, an example of a 481A adjustment, and if you would remember that number, it comes back when we take a look at our Form 3115 application for change in accounting method. I've highlighted here what needs to be completed for this form, and here is our 2191 negative 481A adjustment that goes on our 3115 that I showed you from the template just a second ago. Here's an example of the year-end adjustment. Then here's an example of a completed tax return where this taxpayer only traded securities as a mark-to-market trader. Here's the Schedule C and the 4797. Now here you can click and you can actually purchase the mark-to-market election template from the website. Well, that does it for the mark-to-market election template. I hope you've enjoyed it, and if you have any questions, please feel free to contact me at either of these two email addresses, and I will try to get back to you as soon as I can. Well, thanks a lot for watching, and in this case, good mark-to-market trading.